that real estate investing is kind of like going to school where you have first, second, third, fourth grade, and you have to hit all these grades. At the end of the day, there's some fundamental basics that apply to every deal. And once you learn those, then there's no reason you can't go from the hypothetical first grade to sixth grade and jump there. At the end of the day, it's not that you're more advanced doing commercial real estate. It's just a different strategy, right?
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today is Robert Preston. He's co-founder and CEO of Climb Capital. And buying and selling RV parks is their thing. They're acquiring value-add properties that produce durable yield through the life of the investment. And Robert today goes into RV parks and why RV parks. Why are they focused on that? Why are they recession resistant? We hear that term often, and maybe too loosely, right? But Robert goes into why he believes RV parks are recession resistant today and what they've done. And he's going to share actually a cool story from his military time as well. And we talk a little bit about the military and how that shaped us as entrepreneurs and whatnot. But they're licensed foster parents, he and his wife, and they have 2 children that they've adopted through foster care. So just hats off to he and his wife and those children. I love that about them. But fun fact, in 2020, he purchased an RV park to travel with his family. And this summer, he traveled to Wyoming and brought back a Mustang horse. And so I was asking him about it. I think we forgot to bring it up during the interview, but actually his wife was riding that Mustang yesterday. So I thought that was so cool. Any of you know my horse background, you'll know why I'm interested in that. But man, grateful for his service in the military and his give back to us today of his time and talking through RV parks and why and what passive investors should be thinking about if they're considering RV parks today. Robert, first and foremost, I want to thank you for your service. We're grateful for our men and women who have served, and maybe there'll be a story or two that'll come out from that today, but grateful for that and welcome to the show.
Hey, it's my pleasure to be here. Real honor. Thank you.
Yeah, honored to meet you, and I'm looking forward to learning more about you, more about your specialty, the thing that sounds like you all are very focused on. And I believe there's a lot of people that listen that are wanting to invest or even purchase the type of asset that you all have become experts in. And so I'm looking forward to that conversation. Before we do, what was before real estate investing for Robert? What did you do? And let's dive into some of that and how you got there.
Yeah. So I went to college, Clemson University, read the book Rich Dad, Poor Dad, kind of lost some sleepless nights there, had that seed plant in my brain, ultimately finished with a degree in economics, but immediately did not use anything. So went into the Marine Corps, spent basically 15 years flying airplanes and deploying to Afghanistan and coming back. So prior to my real estate career was being a Marine Corps pilot and learning and reading through real estate in my spare time. But at the end of the day, that was pretty consuming, obviously. And then eventually it was time to move on to something different and picked up that seed that had been planted and pursued it.
Wow, that's awesome. And you said 15 years in the military. What's your craziest plane story or something you can share if you're willing?
Sure. There's quite a few of them. I'll share the pivotal moment, I guess. A lot of details goes into it, but there was one evening in particular, we were flying a mission and there was three aircraft doing a mission and the first 2 were getting shot at. And I looked down and it happens to be the machine gun nest that was shooting at them had me just underneath my aircraft. And I was getting ready to land like basically about 50 feet in front of them, which would have been pretty catastrophic. And so luckily we spotted them quick enough. In their confusion, they didn't realize how close we were. They were shooting at an aircraft essentially underneath us. And so quickly waved off, crew chiefs engaged them, and then the attack helicopters engaged them and eliminate that and come back around. So that's a very abbreviated story. The thing that I took out of that was the night where a lot of things became very clear to me in life and made my stories revolves around basically 3 fundamental decisions revolve around that evening and getting a lot of clarity. And one of them was to find a different way to make a living, right? at the end of the day, there's probably some better ways to make money than getting shot at. So the other two had to do with my faith and had to do with my marriage or future wife. And so getting those straight was important and on to where we're getting here. But that was the evening that made it very clear to me.
Wow, that's incredible. Appreciate you sharing that. Most of us are going to only think about that as like in a movie or something, and but that was very real to you, no doubt about it. And it definitely, I was in the military as well. I don't know if you know that, but
I didn't.
so some of the, I was in Iraq a year, but there's sometimes there that I can think back, right, and it helps put things in perspective in a big way.
It does.
So I can relate somewhat to your story, but man, thanks again for your service.
Well, and
You know,
thank you as well.
I
There's always a
appreciate that. But most, yeah, is man, only think about can only think about right or dream of,
right.
and the what you went through, even in that just a few seconds there, right? That you shared
It's
that.
cool.
So
It's cool in the movies, not necessarily as cool when it's happening, but it's a good story afterwards if you come through it.
that's right. That's right. Yeah. Well, again, thank you for that. Well, let's jump in. I feel like the military. What I usually when I'm speaking and talking to people, I say the military gave me that never give up mentality. All
Mhm.
right. It's not, it wasn't an option. That's why I tell people like it wasn't an option for you to give up in that moment. Right. It just
Right.
that was not part of the multiple choice that you had there. That
Right.
wasn't one of them. And I feel like man, guys who have been through things like that, when they get into business, it's just a whole different perspective, right? On what a problem is or what a big deal is.
Yeah.
And so I love that. Have you seen that in yourself? Just be able to
Yeah.
apply that in business?
I think there's two components. And you mentioned both of them. The first one is perspective, right? When things are becoming tough or difficult, or you're having a bad day, or there's a bad deal or something, some type of bad news of the property, et cetera. At the end of the day, right? Are you going to die? Is anyone else going to die? Probably not. And so that perspective kind of helps put all your problems, your daily problems in a bucket that's you can handle. And so I think that's a big takeaway from what we did and from our combat deployments. And then the second part you sort of already mentioned, I would call it grit. And that is the idea that, just because things are tough or hard, like you said, at the end of the day, there's not an option to quit. So if you eliminate that option, then yeah, it makes tackling problems from a perspective and from there is no exit option, makes dealing with problems relatively easy some days.
Yeah. Yeah. Right. No, I appreciate you sharing there. I just think it's helpful for the listeners to think
Yeah.
about that as well. So you got out of the military. What were some of the first steps towards real estate then? You had read Rich Dad Poor Dad many years before.
Yeah.
What what was in the thought? You get out or off
Sure.
active duty, I guess, and then man, what was next for real estate?
Yes. It's a great question. So I would say I'm probably the most stereotypical investor you can think of in the sense that read the book Rich Dad Poor Dad, went to the weekend seminar, signed up for the guru class, got the mentor, didn't have any money, didn't have any credit, started wholesaling contracts for houses, and then eventually started flipping houses. And flipping houses led to wanting to find that passive real estate, the rental income. And luckily I did kind of maybe skip a step there. I didn't go down the route of buying multiple single family homes. Our first rental investment was a mobile home park, a small one, but it was a mobile home park. And really from there, that's after that park, I learned the power of a commercial deal in regards to finance and in how you could really make a lot of money very quickly. And then after that was the syndication process. And so that's when I learned how to raise money and use that process to then continue to build that portfolio. And for me, I think that's kind of like where the proverbial jet fuel kind of played in and really began to grow after that.
Yeah. Wow. How did you finance the first mobile home park?
First mobile home park, got a loan from Navy Fed, 75% loan to value, had a partner. He put in the other, I guess it's 12.5%. And I borrowed 12.5% from my father-in-law.
Good for you.
So
Man, way to make it happen. Uh,
yeah, zero,
wow.
zero money out of pocket investment and made it work. Turned out quite well.
Good for you. Talk about making it happen. I love that. I love stories like that. And just making some notes because that's definitely notable
Yeah.
that you did it that way. And then you started learning about syndication. You learned about commercial real estate, and I also didn't go the single family rental route. I'm thankful now,
Yeah.
right? And I was even told, hey, most people start this way. Like numerous people
Right.
came and said, hey, most people do this thing over here, and I'm thankful that I just pushed through that. But was that similar to you, or how did it go after that?
Oh, yeah, you mean the skipping part or after
Yeah,
the
yeah, I'm sure people said, "Oh, you're supposed to do it this way."
Yeah, and I think that's probably a lie. Not I don't think it's a lie, but there's a misperception that real estate investing is kind of like going to school where you have first, second, third, fourth grade, and you have to hit all these grades. At the end of the day, there's some fundamental basics that apply to every deal. And once you learn those, then there's no reason you can't go from the hypothetical first grade to sixth grade and jump there. At the end of the day, it's not that you're more advanced doing commercial real estate. It's just a different strategy, right? There's different skill sets there. I, I luckily it was math for me. So when I was thinking about that transition, I had the monthly cash flow number in my head. I knew how many houses, what the average cash flow off a single family house is. And I'm like, that's 46 houses that I have to buy. Like it seemed just that in itself seemed like a big hurdle and a pain in the butt. And so it was just a simple next logical step. Well, where can I buy a bunch of houses at once? Happen to be driving down the road and see basically a mobile home park sitting there. Like, man, it's kind of like a lot of houses. So it was more of a math problem for me that allowed me to skip that.
Yeah, well, good for you, and just so the audience knows, I mean, now I was looking at your website, 50 million in assets under management, 12 deals full cycle, 24 purchase. Congratulations to your all success. You all
Thank you.
moved quickly and done a lot, right? And that
Yep.
doesn't happen by sitting on your hands, to say the
No.
least. But your focus is RV parks, and tell us why. Why RV parks? Why is that asset class been the sole focus for you all?
Yeah. So I left off. We bought our first mobile home park. And then, like a lot of people, this was 2015 ish. We started getting into the C class heavy value add multifamily, and we we bought a couple out of receivership or foreclosure, very rough properties, very extensive value add, heavy reposition, and we did those, and we did well financially, to be honest. And then leading up to 2020, it became pretty difficult for us to find a deal that underwrote to our criteria. And it would be common that we'd be outbid by multiple millions of dollars on our offer versus the winning offer. And something inside of me just said, "Hey, something feels off. There's something wrong here. There's no way for us to make these numbers work from the buyer competition perspective." So started thinking about other assets that might work. And by happenstance, someone sent a RV park that was for sale. It was a Facebook ad, very basic from down the road. And they said, "Hey, why don't you guys want to buy this?" And I was like, we're buying apartment complexes, we're buying mobile home parks. The whole typical stay focused, stay in your lane, stay there. And they just kind of made a comment to me that clicked. They said, "Well, what's the difference between an RV park and a mobile home park? They can't be that big of a difference." And kind of thought about it a little bit more, and it tended to make sense to me the more I pursued it. This was a very small park. It was a very low risk. It was something we could do without partners, syndication wise. So it was basically a learning experience. So we bought it, enjoyed it, did well. And then about the same time, I bought not a mobile home. I bought a motorhome, motor coach. Me and the family loaded up, spent a couple months on the road, actually RVing. So fell in love with it from a customer's perspective. Happened to find another park for sale on that vacation.
Wow.
And yeah, so my second deal we found on vacation, which made that whole vacation a tax write-off. And so one thing led to the next. And by 2021, fighting through eviction moratoriums and a bunch of other stuff, we kind of just hung our hat up on multifamily and said, "Hey, this is RV is an asset class that we like, we enjoy. There's a lot of cash flow in it. There's a lot of upside. There's a lot of runway here. Why don't we just take everything we learned with doing sophisticated multifamily investing and put it into a not such a sophisticated asset class and see what happens.
Wow. I noticed, I mean, a lot of people say RV parks are a, say, recession resistant asset
Mm.
class, right? Why is that? Why would it be recession resistant?
Yeah. So there's a couple factors. Similar to a mobile home community, right? You're at the end of the day, ultimately, you're a affordable housing solution, and so an RV park can either be a resort that is your customers are all paying by the night and they're buying restaurant food and all this stuff that happens. But at the end of the day, like if I have to, I can convert that resort into a mobile home park community, right? And now I have an affordable housing solution that is the lowest entry point for housing that most people can find. And so therefore in a recession, as the lower tier, the C and B class multifamily or mobile home communities, right? They tend to actually flourish and do better as the population kind of compresses down towards the bottom in a recession. So that's one reason. I think if you looked at it from a luxury perspective of, again, how do I vacation, right? So if I compare a typical vacation that's a 2 week excursion somewhere and I factor in the cost of lodging and factor in the cost of food and all this stuff, a RV vacation is about 50 to 30% cheaper than your typical vacation. So in a recession, right, most people still actually, believe it or not, most people still go on vacation. They just find cheaper forms of it. So again, kind of being at that lower tier of a vacation on the rung compresses people back into increased demand. There's a lot of other factors that we've kind of studied and went into it that we can dig into, but the data is pretty clear. You know, the 2008 recession, the 2000.com recession, the 80s, sales of RVs plummeted as a dealer, but their use and occupancy in parks and state parks and private parks stayed essentially the same, if not increased a little bit.
Wow. Yeah, I guess one of my thoughts, and I'm sure you've heard this before, was, well, if it's a recession, how many people are vacationing? Or are they still going? Sounds like the last number of recessions proved that people
Yeah,
are still wanting to vacation. They just look for cheaper options maybe to do that.
they just look for cheaper options, right? And so, and if you think about it, I'm talking about the kind of worst case scenarios and talking about compression there, but these are also people who own relatively expensive toys in the form of the F-350 truck pulling the $80,000 gooseneck stuff. So I'm not pretending like we are catering to the Ferrari and Lamborghini owners, but we're also not dealing with our customer base is not they have means and they have assets and they've already paid for the toy, right? They're paying for
Yeah.
the truck, they're paying for the camper. So what's another $1,000 to go on vacation? And so at the end of the day, you have a pretty committed customer base once they purchase the vehicles.
Yeah. Once they have the RV, they've got the
Yeah,
biggest expense that would hold them back already
already
out
paid
of their
for.
bank, right?
They already pay for it. And you
Yeah.
got the kids and the spouse saying, "When are we going to use this thing that I'm staring at in the it's the front yard, the proverbial front yard?"
Yeah. Wow. Yeah. We just, it's probably been 2 years now. We started camping as
Yeah.
well, and we enjoy it a lot. And so I can see how that works. We like taking the horses too, or, we
Oh,
like camping and stuff. It's a little different than just
yep.
our normal RV park, but still, we just use the trailer to go camping though, more than
That's
taking the horses. So,
pretty
wow.
cool.
Well, what would you say to the passive investor right now that's listening, that's saying, "Hey, I'm thinking about diversifying maybe out of multifamily some and looking into RV parks." What should be some of their biggest concerns when thinking about that operator or the deal itself?
Yeah, concerns wise, and you nailed it there with the operator. So the concern I would have, or the first question I have with most people is like, what is your experience level with operating? And not to be harsh, like it doesn't take necessarily a great operator to run a multifamily apartment complex that's stabilized, right? You buy it, you syndicate it, you bring the capital in, you buy a great third party management company, maybe you self manage, but at the end of the day, there's not a huge amount of variables there. You're an asset manager. With RV parks, you're running a business. That is the downside that people don't talk about. It is real estate. It is high cash flow. It's high yield type stuff, but you're running a hospitality business. And so the day-to-day operations are pretty critical. And it's a barrier to entry for other owners and sponsors, which results in less demand and higher yield. But I think that's the elephant in the room. That's what has to be tackled is can you operate a hospitality based business
Mm.
that is based off of real estate?
Yeah. Yeah, I would say most don't think about that piece, right? But you all are vertically integrated, right now, I think?
Yeah. Yeah. It's almost a necessity. There are some third party hospitality management companies out there, none to real big scale and none that would probably tackle more difficult or smaller properties. And so out of necessity, we essentially created our own internal management company. We have about 42 employees now in that company. We manage our 13 parks.
Nice. And I mean, would you say that's crucial though for the investor, for the past investor that yeah, if I'm investing with an RV operator, that they are vertically integrated?
Yeah, in my opinion, at this state and evolution of the asset class itself, I would I would be very skeptical of someone that I'd be very skeptical of a company that wasn't vertically integrated particularly on the management side. It seems like a difficult task to me.
And what about on the deal side? What are a few things that, hey, the past investor needs to ask about, maybe they're experienced investor, but never an RV park. What are some things that, hey, they need to make sure they know or ask about these things?
Yeah. Yeah, great question. I think one of the things would be to kind of recalibrate your expectation of occupancy,
Mm,
meaning let's say we're looking at multifamily. We're expecting a stabilized property to be above 90%. In an RV park, I oftentimes will underwrite our daily occupancy for our daily rentals. Maybe a good performing asset will be 40 to 50% occupancy for the year. And so that's two things. One, that if you see that, that's not necessarily a red flag. This is not a bad property. And two, if you see maybe some underwriting that's showing an 85 or 90% occupancy on a nightly rated park, you can probably bet that is severely overestimating your income. So so I think the occupancy is the big change. The rest of it is pretty fundamental. You have taxes, you have insurance, you have utilities. Utilities can fluctuate significantly on who pays them, but that's probably the biggest difference in underwriting is getting a handle and grasp on occupancy.
Are RV parks changing hands right now or transacting right now? I mean, with where we're at in the
It,
market?
it's difficult. We so far this year we've closed 3 properties. We have 2 under LOI or negotiating contracts with. So that's a pretty solid year for us, especially relative to what we've seen in the deal flow of a lot of the top brokerages have not closed that many this year. So it is difficult. It's very similar to the other asset classes. I would say that we have a bit of an advantage that a lot of the sellers are driven by their age in this asset class. A little bit, there's a higher probability that's going to be an owner operated mom and pop type of person, and they're driven by other things besides just market circumstances, life, age, kids, grandkids, et cetera. So there are opportunities that exist more than you would find in your very well established asset classes like mini storage or multifamily.
Is there a certain size you all are looking for or larger or
Yes, typically we are looking for about 100 sites or more. For us, we love the Sun Belt. Basically, anything between I-10 and I-40 across the US is ideal for us. Love to be close to interstate exits. Usually there's a water feature, a pond, pool, stream, lake, something along those lines that draws people in. That's our basic criteria, about 100 sites and in that buy box.
shifting gears just a little bit, Robert? What are your all's thoughts on or yours on just the real estate market and the economy, say the next 6-12 months? Any thoughts on how that's going to affect your all's industry specifically, or expectations and interest rates, or anything like that?
I have very little expectation that the rates are going to go back down, particularly in the next 2 years. I think we plateaued. There might be 25 or 50% basis changes up or down, but I think we're going to stay generally where we're at right now. So I'm not a doomsday. And I also don't think that next year we're going to be refinancing back at 3.5%. That's not happening either. So interest rates, that's what I think. In regards to RV industry, I think that is actually going to continue to grow. I've seen a lot more sponsors like me. I've seen the hedge funds, the institutions opening up, finding and adding branches, Monarch. There's the big brokerages all have now a dedicated RV arm, wing, Marcus and Millichamp, all the big brokerages. So I think over the next decade, you're going to see a lot of money pour into this asset. And as soon as there becomes an institutional level debt product, it's going to explode into what mini storage or mobile home communities have turned into a very commoditized asset class. So that's my long range
Yeah.
forecast for RV parks.
Yeah, it's been an asset class that's kind of been under the radar, right? And it's
Right.
kind of it's turning into the new multifamily, I think. It's like
Yep.
gaining a lot more traction, no doubt. But well, any tips on, say, preparing for a downturn when buying an RV park?
Yeah. Certainly look at the basis. An RV park is pretty simple, right? It's a lot of land. It's roads. It's utilities. There's some amenities, but at the end of the day, you're basically renting a parking lot that has a plug. And so I'm seeing a lot of parks sell in the 100,000 per site. No, sorry, not 100,000. Yeah, in the 100,000 per site range, which to me, if you can build it for 35 or 40,000 and you're seeing those sales, obviously people that what's that word? That amount of advantage is going to quickly be absorbed by demand or by investors. So there's only a certain extent that can exist. So if you're buying a lot of things at a very high basis point, I think you're setting yourself up for failure in the future.
Yeah. What about what's your best source for meeting new investors right now?
Mhm. I've always been a handshake type of guy, right? So tends to go well that way. We do a little bit of marketing. RV parks are fun. It's an attractive thing on Instagram. It's easy to make that good, but I'm a big meet you in person networking type of guy.
Can you market to the RVers somehow?
Yeah, actually, so we've just started doing that. We've done some direct mail campaigns to owners of so some excuse me, some RV parks are actually condoed or platted out where the individuals buy individual sites. And so we're targeting those as potential investors. Obviously they have some means, they like the space, they're RVers, they have
Yeah. I mean,
$2 million
even your
dollar
campers,
pre-boast.
like if you have a hundred slot campground somewhere, and who knows how many people actually come in and out of there all year. I don't know.
Yeah.
And you
We're
have all
we're
their
mar
addresses.
we have all their addresses and we're marketing to them, to the campers particularly, we're marketing to them too as deal finders, right? So that's why trying to build wholesalers out of all these people traveling the country and
That's awesome.
staying apart.
Yeah.
Yeah.
Good for you. That's awesome. What's the biggest challenge you all are facing right now in the business?
Deal flow is number one. We talked through that. Second is, of course, debt. Debt was already a problem with RVs. There's two big barriers to entry. One is management and two is debt. And that's why you don't see many sponsors do it. So now the fact that the rates are increasing and more and more banks are just conservative with asset classes in general. There's many banks that just say no, period. Doesn't matter what the rates are. We're not doing that. So that's the second biggest hurdle for us to grow. That has resulted in the opportunity. Owner financing is pretty prevalent in this space, and it's a very easy argument now. If you want to sell your park, you need to offer financing. you actually make a pretty decent rate. So that conversation is a lot easier to have.
Nice. What are some of the most important metrics that you track, Robert? It could be personally or professionally.
Ooh, for RVs or personal. So,
Yeah, either way.
yeah, one of the interesting metrics that we track across the whole portfolio, which is about 1,400 sites right now, I think, is just monthly rental income per site. And it's pretty neat to track that. And month to month, we actually track it week to week. And we have parks from Arizona to South Carolina, as far north as Cincinnati, all the way down here to Florida. And so you can see seasonality of weather. People think of weather as the cold part of it. Well, we've actually found that the heat drives down our customer demand faster than cold. And
Hmm,
so being too hot makes people not RV faster than being too cold. So interesting fact. And personally, what do I don't know if I got a good answer of what I track
that's all
KPI
right.
personally.
Any habits that you're disciplined about that have proven success for you?
Do a lot of reading via audiobook. So if I'm in a car driving to and from work or traveling, probably have an audiobook on. It's generally almost always nonfiction, some type of business type of book. And then I do a lot of journaling in the morning, kind
Cool.
of write down some thoughts in the morning.
Any good book recently you'd recommend?
Ooh, I really enjoyed Who, Not How.
Yep,
That was a good book as a leader, kind of growing growing an organization that has a lot of employees now. That really helped me shift some thought.
that's a good one. Benjamin Hardy, Dan Sullivan.
Yep.
Yeah, I've read that one, and they've got a recent one out too. 10x is easier than 2x, which is pretty challenging, by the
Yeah.
way. So, but wow, what would you say is the number one thing that's contributed to your success?
I think going back to the start of our conversation, grit, right? Having the idea that you can't quit is probably what keeps you going. And then I I, I use mentors, I use education. At the end of the day, that paying for some education, if you use it, is by far the best investment you can make. I don't think you have to do that. There's plenty of other ways to do that, but yeah, having mentors or people to call and say, "Hey, I'm in this situation. What do I do next?"
For sure. How do you like to give back?
Give back. So we're pretty heavily involved in our church. You and I mentioned we're my wife and I are foster parents, so that's a big component of what we do. I have a passion for kind of the children, right? That don't have an advocate. That's a big part of what we do from a personal level, and then as a business, part of our business model is also part of giving back, right? Make make an atmosphere that allows families to reconnect with each other, to reconnect a little bit with the outdoors and with nature, and go back to like being okay to walk to your neighbor and say, "Hey, you want to have a hamburger or a beer together around a campfire?" Like that happens at a campground. So that's part of what we love. It's part of what we're doing. And like part of what we're trying to create is just like this ability to reconnect to each other, particularly for the family and then to your neighbor, that seem to have lost the sense of that a little bit in America.
Yeah, that's incredible. I like that a lot. And Robert, I'm grateful to have met you and have you on the show. You and I have a lot in common, and so just grateful for your years in the military and obviously coming back and making a big dent in the real estate industry as well, and RV parks and bringing your kids home and just all you're doing there. So I want the listeners to know too. You have a fund that's open right now, a 506C fund. I'll mention that you should go to
Yeah.
their website and check it out. And Robert, tell them where to go, where they can learn more about you and the fund.
Yeah, absolutely. Thank you for allowing that. Our website is climbcapital.com, which is CLIMB capital.com. And the fund is called the Campfire Fund 506C. We own 5 assets in there now, should add a couple more by the end of the year. And yeah, love to be able to chat and talk to you about it.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.